Markets taking a bit of a breather, but we have had some pretty strong gains, particularly in the Asian markets and some of the European markets. Our markets up a little bit yesterday, and of course today down by 0.5% so far.
Yes, Stephen, I think we're seeing a lot of profit taking going on at the moment. We've had a very strong week, especially to the end part of last week, and yesterday we're also up a little bit. So I think we're just seeing some strong profit taking, but it also shows the effect of the United States being away on holidays. Market liquidity in the market is very thin at the moment. Volumes are down. I think yesterday on the Aussie was value traded there was about 5.9 billion versus an average of about 8 or 9 billion, and it just goes to show that when the US is away, nobody is coming out to play.
Of course, it looks like there are some renewed concerns about the health of European banks. There was a report in the Wall Street Journal just taking a look at those stress tests that were done quite recently on European banks, and that seems to be putting pressure on banking shares in particular, but really on the European markets as a whole.
Yes, Stephen, I think, what we're seeing there is, the Wall Street Journal came out saying that they're questioning the health of the banks in the Eurozone and questioning the stress test that was done earlier in the year. And also Germany came out saying about 10 of its biggest banks may need about 105 billion euros, I beg your pardon, to meet the revamped banking regulations or banking rules in that country. So I think a very bad day for all banks, and also we see that effect quite drastically in the euro, where it's trading at the moment at about $1.27, somewhere there.
Of course, the rand has followed suit. It's weakened all the way to 7.28 against the dollar. Of course, the rand traded down to 7.15 on Friday, a 2.5-year high. So it looks like the rand really still being dictated to by that euro-dollar movement.
Yeah, it's dictated to by risk aversion, it's dictated to by liquidity in the market, but also, as I said earlier, yesterday the United States was off, so therefore very few players in the market. But yes, a lot of risk aversion coming out straight after the European news there, and we're seeing the rand take quite a back foot this morning. Yesterday it was went up, I beg your pardon, to about 7.16, which is such a strong showing from the rand, but now back down again at about the 7.28 level or somewhere there.
Of course, the latest rally we saw in the markets was really sparked by those US ISM numbers last week and, of course, the jobs data which came out on Friday. But, I mean, those are only 2 data points, and we've had a number of negative data points as well. So it looks like it's still not very clear where the markets are going to go from these levels.
Yes, and right now what we're seeing is also lack of news flow. I think also that's what's contributing to the weak markets today. And, today we've got the US confidence and the ABC confidence numbers coming out. That's only coming out at 11, so just goes to show how much weight they actually put on that number. We've got employment trend numbers coming out today in the United States. That should maybe somehow move the market, but I think with the US futures being down so much, the players are just waiting to see what will happen when the United States goes, when the players from the United States go into the office today and start trading. Then perhaps we'll see something. I think tomorrow maybe we'll start to see some traction in this market, but certainly not today, certainly with not the lack of news that has really come out. Locally, we're expecting the MPC on Thursday to announce rates, and I think a lot has been built into that price already, into the current prices. Market expecting about a 50 basis point cut on Thursday. So if anything, upside potential, would only come about should the MPC or should the Governor of the Reserve Bank actually not cut, but a lot has already been built into those prices.
And do you think if the rates aren't cut on Thursday, we might also see banks and retailers pull back a little bit more if they're also pricing in this rate cut?
Yes, I think they are pricing it in, but any kind of other surprises would be, would help buoy those prices. But it will be the more consumer sensitive, the more interest rate sensitive stocks that we'll see react quite well. As you said, banks as well as retailers, we'll expect them to, maybe rally a little bit. But this has been a long time coming. The market has been anticipating this cut for a while, and and the conditions are right, as the Reserve Governor had set them: low inflation, strong rand, low growth prospects. So I think a lot has gone into the prices as we speak.
In Ntombenhle, we had gold and forex reserves out this morning. Net reserves up slightly, not a huge amount, and gold reserves also up, which I assume is due to the firmer gold price over the course of the month. But it doesn't really look like the SARB has been intervening very much in this market, despite the rand trading at these very strong levels.
Yeah, I think we're all disappointed with the forex number. I mean, based really on what the governor has been saying about the strong rand, would have anticipated a lot more activity. But they're not playing really in the open market so much, and I think that number is mitigated by forwards and swap transactions that they have on the forex market. But what's nice is to see that the gross reserves are about 7 months of imports, which is and the international standard for emerging markets is 6 months cover of on imports. So there is some slight improvements in the international liquidity of the country, but not so much as we expected.